Hey everyone, this is Will from PowerTraders.com. Today I'll be doing some analysis on US indices and basically give you guys a weekly update on what the US stock and US indices could be doing in this coming week. I'll start from the beginning for our new viewers out there. As you guys can see here, we've been trading this really nice channel trend since November of last year. You can see here we have held support multiple times as well as a resistance level. And what's really important that I want to point out is that since we had this breakout here in May of 2021, we have failed to break above this yellow resistance level. We've traded below this ever since. You can see there's multiple times we try to break above, but we have failed to break above it ever since. And on the downside, we can see here this, I should indicate this in a different color. This blue line support here has also held multiple times as well, and actually we saw a test of this last week. So let's jump in and take a look closer. So of course we had a breakout from this channel finally, and obviously we trend up higher and higher, and then we had a bearish breakout, really clear here, very clear here, which basically took us all the way down to test the support level here. And of course what sparked the sell-off last week was, I would say, mostly the FOMC minutes, where some of the Fed members basically started talking about tampering, and that basically caused this sell-off. But when you look at it, this sell-off is not that big, guys. It's only 2.3%. That's pretty much nothing, to be very honest. But anyways, let's see. So you can clearly see price held, and we came back up. We saw another retest right here and resumed off. And of course, we're seeing some resistance right now, testing this line here. But nevertheless, price recovered really quickly. And although, people are taking this as, price kind of just kind of like whatever, the Fed's tampering, whatever, we're just going to ignore it for now. And that may be the case. But I'll come back to this in a second. Let's go on to the Nasdaq. You guys can see here, just like the S&P 500, we had a bearish breakout, but then price recovered really quickly, and now we're back at resistance level, which we have been struggling to break since pretty much July, and that level is right around 15,150. So keep an eye on the Nasdaq in case we do see a breakout. We may see a breakout. Maybe momentum will zoom off, who knows, but more likely we'll see a breakout, retest, maybe go a bit lower, and we'll see maybe price will zoom off. On the other hand, we could get rejected also. Let's see what happens from here, guys. Definitely keep an eye on the Nasdaq as we are testing a major resistance level. For the Dow Jones, we see here we had a clear breakout in August. You guys can see here, but then with the sell-off last week, price came down, tested support level right here, corresponding with these levels. You can see one touch here, two touch here, and we quickly came back. This looks like another breakout. We came back really quickly, so also keep an eye on the Dow Jones as well. See if this momentum could continue to the upside. The Russell. So the Russell is actually the most interesting, in my opinion, of all the indices in terms of trading and opportunities. We clearly see here price trading this channel. Of course, we had a breakout, took us all the way down here, which is this zone here. I guess you can kind of draw this zone here as a support level, right? Major support. So we've held this level so far. You guys can see multiple touches, 1, 2, 3, 4, 5. So for those of you guys who bought Russell down here, this may be a pretty attractive trade. We may zoom up to the upside, trying to test these top level of the parallel channel this indice has been in since pretty much February, right? The Russell has been trading sideways since February. It's just been pretty wild. It's quite a few months just going sideways. Pretty much no gains, no losses, just sideways, right? On the other hand, we could also see a retest. So we may see price come back down to this major support level. Maybe we'll hold, maybe we'll break. But if we do come back down here, that may give an interesting opportunity for a long position. All right, let's take a look at some of the hype stocks for you guys who new to my channel. The way I evaluate hype stocks is through XITK and of course ARKK. Of course, you can see here there's a pretty big similarity between these two. There's not like a hype stock or high P ratio index, but you know these two I think are the closest we'll get. So as you guys can see here, price has been down. You know, we've been fighting this downward trend since February, right? So although we may be seeing some support levels soon, especially if price come down to pretty much 200, that's a key support level, right? We see touches here and touch here. Although we may see a resume off, you guys have to keep in mind that we're fighting this really strong bearish trend, right? So betting that there's going to be a breakout or having a long entry here with the idea that we're going to have a breakout and price is just going to shoot back up like it did, you know, last year, as we saw here, I think is pretty unrealistic, guys. I think I would avoid XITK for now, although yes, this kind of looks like a breakout retest and then you know, resume off. But the fact that we haven't had any momentum, especially we saw this breakout, we haven't seen any momentum at all building up on this stock. To me, is an indication that you know, this correction, this downward trend may not be over. On the other hand, yeah, we may see a bit of move coming back up potentially. If you kind of draw a line there, maybe like something like that, we may bounce back off to 220 for now. But you know, like I said earlier, we're just really fighting a downward trend, and I don't want you guys to be catching a falling knife. Same thing with ARK. Yes, it kind of looks like we are holding support right now, and we might see a bounce from here. But just like XITK, we're fighting a downward trend, so don't catch a falling knife. All right, so let's see what's happening this week. We do have some interesting earnings. A lot of Chinese earnings coming up. You see JD, Pinduoduo, and I'm thinking of maybe coming up with an analysis video on the Chinese indices and some Chinese stocks, because as you guys know, they're just getting wrecked. Especially Alibaba. Alibaba has been really getting wrecked since last week. I think it's been down like at least 10% since last week, and overall it's down like 50-60%. So let me know if you guys are interested to see that. But anyways, do have HP, Marvel, Workday, so some interesting earnings coming out. Best Buy may be interesting because that may give the market a more of a hint to its retail side of the business, see how that's recovering. Anyways, we also have Peloton Interactive. Let's see how this may also have an impact. Maybe this will be a catalyst or kickstart a sell-off in the hype stocks, but we'll see. And of course, the economic calendar. This is by far the most important, guys. We do have a lot of home sales data coming out. You can see here more home sales, new home sales, existing home sales. We do have quite a bit of oil data coming out also, so keep an eye out for that if you guys are trading oil or energy stocks. We do have durable goods, but most importantly, guys, Thursday, look at this, GDP. So this is gonna be really important, guys. And on top of that, right, we got initial jobless claims. So we're having GDP, and then we're gonna have initial jobless claims. So that's gonna be huge. That's, you know, that could really bring a lot of volatility in the market, whether to the upside, downside. And if that's not enough, guys, guess what? Friday is Jackson Hole. So we start off with, you know, well, we had Powell speaking on Friday, so that's pretty crazy. And on top of that, we have when the market closed Saturday and Sunday, you know, we're gonna, you know, Jackson Hole, Jackson Hole date. So you can see here it goes from 26 to 28. So although the market's closed, there's a lot of data, a lot of information coming out on the weekends, which could also be huge impact on the market on Monday. So just to recap, guys, Thursday GDP, and then initial jobless claim, and then Powell speech, and then we have a weekend long Jackson Hole. So what does that mean? That means that we could have huge volatility coming in later this week as well as next week. So definitely keep an eye out on the market this week. We may see a lot of stuff happen. And one thing I do want to point out with the VIX, yes, we just had a spike in the VIX, guys, as you guys can clearly see here. However, just because we had a spike doesn't mean that volatility will fall. A good example is look at May right here. We had a spike. We kind of cooled down a bit for a few days, and then we had another spike. Another example is this one in March. Yes, we had a spike, and we kind of cooled down for a bit. And then literally just 3 days later, we had another spike. So just because volatility is falling right now, guys, doesn't mean that we'll keep going, lower. We may consolidate. Volatility may consolidate for a bit, and then when GDP data comes out, when Powell starts speaking, maybe we see we could really see volatility pick up on Thursday and Friday. And what will that mean to the S&P? Let's see, guys. Of course, the levels are most important, and definitely right now this blue line, this blue support line is most important. So maybe volatility will take us back down to test this blue line. Maybe we'll even see a breakout. But I think if we do come back down here, they may serve as interesting long opportunities. On the other hand, if we do break this green line, right, guys? We have never broken this green line, this green support since, well, never. Even we had a test here, but we never break below it. So if we do break below this green support, I do think more downside could be installed. Anyway, guys, if you guys enjoyed this video, please give us a thumbs up and, of course, subscribe for more content.